All right, today we're digging into one of the most just spectacular business collapses in recent memory, the story of WeWork. It really is an incredible tale of ambition, hype, and a very, very harsh collision with reality.
And that's really the big question, isn't it? How does that even happen? This wasn't some slow, gradual decline. No, this was a complete and total freefall. So how did a company that was being hailed as the literal future of work just see its value evaporate almost overnight?
Okay, so here's how we're going to break it all down. First, we're going to look at a pattern of failure that's actually pretty familiar. Then we'll dive into WeWork's insane valuation, pull apart its business model, chart the rapid collapse, and finally get to the big lesson that, well, a lot of people seem to miss.
To really get what happened with WeWork, you first have to understand that this story, it isn't entirely new. It's kind of the latest, flashiest chapter in a very old book about giant companies that just failed to see the future staring them right in the face. So let's look at 3 classic examples. You're going to know all their names for sure, and their stories really do hold the key to unlocking the whole WeWork saga. First up, Kodak. For decades, they owned photography. I mean, they had this brilliant business model, sell the cameras for cheap, and then make an absolute fortune selling the film. But here's the crazy part, a little detail you won't see on the slide. A Kodak engineer invented the first digital camera. The disruption literally came from inside the house. But management had a choice to make, right? Do they embrace this new digital future and basically destroy their own incredibly profitable film business? Or do they protect it? Well, they chose to protect the past, and in doing so, they completely forfeited the future.
And then there's Blockbuster. Remember them? Their entire model was built on brick-and-mortar stores, and, this is the key, a huge chunk of their profits came from late fees. Then this little company called Netflix comes along, offering a subscription with, get this, no late fees. They just removed the single most annoying thing about renting movies. And yep, here we go again. It's the same fatal choice. Blockbuster just couldn't bring themselves to give up that sweet, sweet late fee money. They saw streaming as a tiny little niche, not a fundamental shift. So they doubled down on their stores, and well, we all know how that ended.
And finally, Nokia. These guys were the undisputed kings of mobile phones. They made tough, reliable hardware that everyone loved. But then the iPhone showed up, and the entire game changed overnight. Suddenly, it wasn't about how tough your phone was, it was about the software, the apps, the ecosystem.
So here's the thing. Nokia kept perfecting the hardware, making the best physical phones on the planet, while Apple and Google were building these entire digital worlds you could hold in your hand. They just completely missed that shift from a product to a platform. By the time they figured it out, it was way, way too late. Okay, so all of that history, all those cautionary tales, they bring us right to WeWork, the most dramatic, high-flying example of this exact same pattern, but with a very modern, tech bubble twist.
Just take a second and look at that number. $47 billion. At its peak, that's what private investors thought WeWork was worth. That put it in the same league as some of the most valuable startups on the entire planet.
Which makes you ask the obvious question, what was this company really? And how in the world did it convince some of the smartest investors on Earth that it was a revolutionary tech company and not just, a real estate company? Okay, now we're getting to the real heart of it. Because when you strip away all the hype, all the talk about community and elevating consciousness, what you find underneath is a surprisingly old-fashioned and incredibly risky business model. This is it. This is the whole business. They'd go out and sign these massive 15-year leases on office buildings. Then they'd furnish them, chop them up into smaller spaces, and rent them out on flexible, short-term contracts. That's it. It's a real estate arbitrage play. And this slide just perfectly captures the core problem. The story they told, the pitch, was about being a scalable tech platform. But the reality? The reality was a traditional real estate business with a gigantic mismatch in risk. Think about it. They had massive, long-term debts, but their income was all short-term and unreliable. That is a recipe for disaster. So when WeWork filed to go public, they finally had to open their books for everyone to see. And for the first time, investors and analysts could really kick the tires. And boy, did they find red flags. The business model risk was obvious, there were serious questions about leadership and governance, and there was just no clear path to ever making a profit. And what happened next was just breathtakingly fast. The second that financial curtain was pulled back, the entire house of cards didn't just wobble, it completely collapsed in on itself.
I mean, just look at this timeline. At the start of 2019, they're a $47 billion giant. By August, the IPO filing blows the lid off everything. A month later, in September, the IPO is dead in the water. And by the end of that year, the valuation had crashed by more than 80%. It all fell apart in a matter of weeks.
So what's the big takeaway here? This isn't just about one company's spectacular failure. The WeWork story is a really powerful modern cautionary tale, and it's got a timeless lesson right at its core.
This right here, this is the whole thing. You can have the most inspiring story, you can have the fastest growth, but if the basic economics don't work and there's no real governance holding things together, it just isn't sustainable. Sooner or later, the market will always correct that misalignment.
And let's be clear, the vision to change the way people work, it was actually pretty powerful. But a vision alone doesn't pay the bills. WeWork wasn't brought down by a lack of ambition. It was brought down by a complete failure to build a sound, profitable business that could actually support that ambition.
And that leaves us with one last really important question to think about. As you look around at the high-flying companies of today, which ones are built more on a great story than on actual substance? Which ones might be making these exact same mistakes right now? Because if history tells us anything, it's that someone always